Hello and welcome to the Global Eye. I'm Shireen Bhan. The big international story that we're tracking today, just 24 hours ago, British Prime Minister Liz Truss said, and I quote, she's absolutely committed to the proposed tax cuts. But today, a U-turn. The British government has reversed its decision to cut the topmost tax rate from 45% to 40%. And this move comes after widespread backlash and market turmoil. The International Monetary Fund had warned that the tax cuts will in fact increase inequality. Arabelle Gumed gets us more.
Early this morning, we got word then that the UK Chancellor of the Exchequer, that being the Finance Minister, Kwasi Kwarteng, had decided to reverse his decision that he had set forth on September the 23rd, which was to cancel and abolish, as he had put it, that upper tax rate of 45%, which of course impacted the wealthy. Today, doing away with the abolishing of that top tax bracket and instead saying that it had become a distraction to what he believes was still a great growth plan for the UK economy. Markets have stabilized somewhat on the back of that. We saw the pound early this morning gain around 0.7%. That strength perhaps weakening off just a little bit. We even saw predictions on interest rates perhaps not set to hit that 6% mark and instead hit around 5.5 to 5.75. It doesn't take away, of course, that impact on the gilt market, where the BOE, the Bank of England, has indeed intervened and said that they will throw around £5 billion per day to try and shore up that gilt market. So questions around stability still at the fore.
Arabelle, many thanks for joining us. Yes, the Bank of England was forced to intervene and now the UK government has done a U-turn on that tax cut. Now, shares of Swiss lender Credit Suisse plunged across global markets amidst rising concerns over its deteriorating financial health. The stock tanked even after the CEO reassured the clients and employees about their liquidity and financial position. The bank's credit default swap price has jumped to its highest level, rising to 239 basis points from 55 basis points at the start of the year. Leslie Picker is here with more. Leslie.
The rumor mill kicked off in earnest with a report about a week and a half ago saying the firm was sounding out investors about a capital raise. That news, although disputed by sources close to the firm, sent the stock to a record low, and it's fallen almost every day since, now significantly lower than $4 a share. The firm sent out a press release a week ago saying it's on track with asset sales and divestitures, which would help raise cash without diluting shareholders. On Friday, CEO Ulrich Korner sent out an internal memo obtained by CNBC where he tried to comfort employees and amid a slumping stock price and, quote, uncertainty and speculation. He said, quote, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. So is Credit Suisse having its Lehman moment? Well, Credit Suisse's common equity Tier 1 ratio at the end of Q2 was 13.5%. That's higher than most U.S. banking peers. I'm told there's genuine interest in its securitized product unit, which could shore up some capital. However, the firm is sitting on hundreds of millions of dollars in losses from leveraged buyout-related debt that the market won't absorb amid this current risk-off sentiment. And it's impossible from the outside to get a minute-by-minute account of the true picture of risk on its balance sheets.
Leslie, many thanks for joining us. Credit Suisse under pressure. Joining us now to discuss these global stories is Jeff Chowdhry, partner, RLC Ventures. Jeff, always a pleasure. Many thanks for joining us. Let's start by talking about the big U-turn that's coming from the UK government. 24 hours ago, the Prime Minister saying that the government was absolutely committed to the tax cuts. And today, a U-turn with the Chancellor saying, well, we have heard you, we have listened, and we just need to do better. How is this going to go down with the markets? I mean, we saw the Bank of England being forced to intervene on the back of what the government had done. What now? What next?
Good afternoon, Shireen. Good to be back again talking to you. I think this move actually was absolutely inevitable. It was the wrong move for many, many reasons initially, politically, economically, and morally. So if you just take those in stages, from an economic perspective, reducing the top rate for high-rate taxpayers actually has very little economic effect. So it was wrong to do that in the first place. From a political perspective, if they had continued with this, it would have meant political suicide, essentially, for the new Prime Minister and probably her Chancellor as well. So she was probably going to be out of a job probably as quick as she came into the job. And that was not because of the UK electorate, it's because the Tory party, within the Tory party, there was a lot of unease. And then thirdly, morally, in an environment where we have recession, we have a terrible, terrible situation in terms of the economy, cutting the top rate tax for high earners is simply not the right thing to do. So this was really inevitable, this U-turn that we've seen today.
Absolutely inevitable, as you point out, and decadal high inflation, multi-decadal high inflation, that is also something that the government there is battling with. But in terms of what the takeaway is for the markets, Jeff, and we don't know what is going to follow now from the UK government, but we did see a little bit of relief across global markets when the news broke about this U-turn. But in the near term, what is this likely to mean?
Yeah, I mean, I think in the medium term, the short term, medium term, I think there's a lot of uncertainty. I mean, unfortunately for the UK's position is you have a number of global things which are going on, which are compounded by UK issues. So the global things are the ones that you're aware of. US interest rates obviously continue to go up. The war in Ukraine putting up energy prices. Those are sort of the global things which they can't get away with. On top of that, the UK economy is not in good shape at this point in time. And in particular, you've got monetary policy, essentially interest rates going in one direction, which is up. And you've got fiscal policy in terms of spending and tax cuts going in the opposite direction. And so this is not a good recipe for either market sentiment or a market appetite to take on risk. And so someone said to me the other day that this is probably the greatest divergence between economic fiscal policy and monetary policy for over 30 years. And that's the environment that we're living in. And that's not a great environment for markets.
It certainly doesn't seem like a great environment for the markets at this point in time. But Jeff, let's talk about the other big story and the speculation around Credit Suisse and what's going on there. We have seen that internal memo that the CEO has shared with employees and clients saying, look, don't judge us by our daily stock price movement. But there are concerns now on what this could mean. Is this a Lehman moment, and what will that mean in terms of possible contagion?
I think it's very difficult. I mean, the simple answer to your question, Shireen, is that nobody actually really know what's under the bonnet in terms of what's going on within the company, in terms of the potential losses or losses that they may have. I would say sort of two general things. First of all, whenever you get market dislocation, and we've seen this many, many times during market, there are always rumors about financial institutions, whether they're banks, whether insurance companies. Obviously, during 2008, we obviously had the big moment. So there's always these concerns. Secondly, and I'm sure this is the case, there are a number of financial institutions who are having issues, having problems, and they're just simply not publicized. And so it's a shame for Credit Suisse that they're the ones who are sort of in the spotlight, even though their capital position is in good shape, and even though the fact that the CEO has come out and reassured the markets. And also just to point out that obviously they are regulated by the Swiss authorities, which is one of the toughest in the world, and the UK authorities and the US authorities. That's not to say there can't be any issue, but I would just say that I'm sure Credit Suisse are not the only company or the only bank at this point in time who are under a bit of financial stress.
Yes, and we will have to wait to see the outcome of their meeting, the next date for a potential review and a growth strategy going forward. We're expecting some details to emerge on the 27th or around that time of October. Jeff, let me end by asking you what the prognosis is as far as the markets go in the near term. We've got all of these factors that we've already spoken about, but the big comfort that was coming in from the oil market with oil prices declining, we're now starting to see prices edge higher. We've got that crucial OPEC meeting on a possible cut in production. What are you reading into the market movement at this point in time?
I think still very much one of caution. I think interest rates clearly haven't run their course, going up. Inflation still, I don't think, is discounted properly in terms of rising. I mean, one of the reasons why oil prices are coming down is that there is concern in the market that basically a recession will cut global oil demand, and as a result of that, prices have started to come down. So that's not actually a good recipe for the oil price to go down, the fact that there's less usage. So still very cautious at this point in time. Obviously, markets have corrected very significantly so far this year, but I think we're still in for a very rough 3 to 6 months.
A rough 3 to 6 months. A quick word on India, Jeff, before I let you go.
I don't think, unfortunately, India is immune to the global sentiment. I know, obviously, FIIs have steadily taken money out of the market, and if the global markets remain uncertain, I think that India will continue to go down with the other markets in line.
Jeff Chowdhry, always a pleasure. Appreciate you joining us here on The Global Eye. Appreciate your time. We will head into a break, but up next, we turn our focus to Brazil. Outgoing President Bolsonaro and former President Lula headed to a runoff. Lula tops the race tally but falls short of majority. A special discussion when we return.